Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, July 20th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES right now. Another narrow range day heading into the RTH Open. This one 13.25 points of range. That's 31% of ADR, and right now we are currently testing the previous session's low right on the button. Given the uptrending market here, again, bulls are looking to defend prices at or below the previous session's low for a shot at returning it back toward highs within this uptrending market. At some point here, perhaps we might get to a point where we're at a cycle high and we see a little bit more of a pullback, something like this here or this here. But we haven't quite seen that just yet. Maybe today develops into that with a push through the low, which would then open up maybe a return to 45.47 or maybe a bit lower. Again, even a pullback as deep as 4,500 over the course of the next several days could be a great buying opportunity for a continuation ahead. And as we look into next month here, a developing higher value relationship with a confirming bias on the close, any pullback into that pivot range could still be defended for a continuation, again, until proven otherwise. We have reached the upper end of the market structure at 4,600 from 4,200. We talked about that before. If we were to transition through 4,200, we have a shot to go all the way to 46. And once you do reach 46, there is the potential to come all the way back to 42 as this trades in the new distribution. We'll see how we behave from here. But again, the trend is what the trend is right now. And so again, any pullback could still be defended until proven otherwise. And from an intraday perspective, keep an eye on the previous session's low here. If there is a strong rejection at 45.80 or 45.75 or prices below that previous low, we could be looking at an outside day up with about 40 to 45 points of range. All right, taking a look here at the NQ. The NQ has pulled back a little bit more than the ES. You can see well below the previous session's low right now. The last time we were below the low was a Monday here, and we've seen this thing go outside day up. The previous Monday was also a failed new low and a bounce. Those are the only two times we've been below the previous session's lows here over the last couple of weeks since this move has taken hold here. Now over here, we did have lower highs, lower lows on this modest little 4-day pullback, and then we launched higher. So again, even if we pull back here into this zone, call it 15.4, 15.450, that could still be an opportunity to return this thing back toward new highs. So again, very bullish bias. We do also have this narrow range here, and we've finally gotten the breakout from that narrow range. So there could be more energy released out of that range over time. So again, this pullback right now, looking for signs of a strong low or rejection for the day. It could continue to be a one-day pullback, and then perhaps Friday's a failed new low and bounce. So again, how much pullback do we get up ahead, if at all? And then looking for bulls to defend for another rotation back up. All right, take a look here at crude oil. Crude oil right now up about 7, almost 0.8%. This one has been trading around that 75 level. You can see right here 75 is this level right there, and this market has formed a box, or is forming a box right around that level at the moment. Currently a big time upflow here, especially after the rejection at 67. That has taken us back up, and right now we could continue to build out in this range for a bit as this thing continues to 80.5 and perhaps as high as 83.52. Failure to hold 74 here, and you're breaking the range to the downside and staying mostly within this range. We do have an expanding component here to this range, so perhaps an expanding range could be in development here, which would take prices back down within the range here. That could be in play, but again, right now, inside this range, today, narrow range already, 38% of ADR, inside day at the moment. We could have a little bit of upside bias, but again, range bound within the range here over the last week, and also within the current intraday range as well. So keep an eye on crude oil here. We could see a little bit of chop here back and forth, but once we get out of this range here, could have some directional conviction. Taking a look at gold here. Gold seeing a bit of a failed high at the moment, reached up and tested the bottom of the key range, 1985.80 here. The idea was for today to be the day that we likely go hit 2000. You had an inside day here the previous session. Today could have been a great day for a continuation to the upside to go get 2000 and then perhaps start to see a little bit of weakness. Instead, so far, we've seen a reaction happen of prices above 2-day highs. Prices pushed through those levels early last night, overnight trading, and then we've seen price drop back below, absorption off the 1986 level, and then we've dropped to new lows just now. So at the moment, prices are responding to 1985.80, which is the key range low right here. Key range high is up there, the midpoint is there, and so far, once this key range was developed and price tested this low, it's been trading all down here, either at or below that low. And just recently here, we finally went to go test it. So are we going to get 2000? Can this thing shake it off a little bit? Initially, the idea was any pullback could be a buying opportunity for the next squeeze. So maybe we can find a strong low on this decline here. We'll see what 1965 looks like if it can get that low. But overall, still trending up at the moment until proven otherwise in the near term. Lastly, looking at the YM. The YM currently with an inside day, 129 points of range. Inside day trading around the midpoint of the previous session. A big time push through 35K for the first time in a good long while. Big time squeeze overall. And again, that 35.4, a big time upside level. We finally got it up there. It's an FOMC key level, and when you bring it back, that 35.4, so if I draw a line right here, which we reached yesterday, is about as high as this market has gone since the initial sell-off occurred to begin 2022 last year. So again, that sell-off here brought you below, the retest here dropped you, the retest here dropped you, over here back down, and now here we are hitting that level yesterday, 35.4, and showing a little bit of a back off here over the last afternoon plus. So is this enough to push us back down a little bit? Maybe, maybe not, we'll see. But even a pullback here, again, into the breakout point could still be defended until proven otherwise. So even if we see a day or two of weakness here, this market remains quite bullish until proven otherwise. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.